Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be having a very packed program looking at various things. Firstly, I'm going to start off by looking at the general market and share with you my perspective on the bigger picture view. And secondly, I'm going to do the normal technical analysis to make us all aware of what's actually going on in the charts and what we can expect in the next few days and next few weeks. Thirdly, I'm going to share with you something absolutely amazing, and that is that I keep getting asked this particular question of how and when to actually buy at the lowest parts of the market. So today I'm actually going to share with you two magnificent ways of how you can virtually guarantee buying Bitcoin or altcoins at the bottom of the markets. And if I get any time, I'll have a look at the altcoins as well as the Bitcoin miners, and at the end, I'll try and share a few wisdom bite thoughts which I've actually accumulated over the last 20-25 years on my journey of life, and I hope you'll find some value in that. So if that sounds interesting, then without further ado, it's Sunday, it's time to put everything away. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, so I'm going to start off with a general perspective of the market and seeing exactly what's happening, because one of the things that I have noticed is that just like yourselves, I watch a lot of the YouTube videos from other YouTubers, and all of them I found very highly valuable, especially the comments underneath the videos, which I always get a certain amount of a feel for the temperature or the sentiment that's out there from the majority of people. And you can't help but notice that there is a high level of negative sentiment that's come into the market over the last month or so. The other thing is, not many people are talking of a blow off top anymore. And instead, the emphasis seems to be asking, is the top already in? Have we got a double top? And many people have unfortunately got shaken out by this move down here, just like they did over here and just like they did over here. Because these downward movements, that's what they're designed to do, to get rid of the weak hands in the market. So when only the buyers are left in the market, that's when we get this. And once we understand that that is how the market works, then you don't get shaken out by these types of movements at all. However, there are points or red lines that we need to have so that if a certain line is crossed, then we have a decision to make and may have to then get out. But this is where we need to be able to look at the overall picture and come to a conclusion of where, with a high degree of probability, the market is going. So for me, what we have is that we made a very strong move to the upside here, which culminated in this first top that we got. Now, there were no characteristics along here which told me that this was the top. And especially when this fell down here, this didn't seem the characteristic of a blow-off top market that went into a bear market. This to me seemed like a healthy correction down, creating a base from which to take off for the next leg up. And here we've made a new all-time high after a strong base down here. And again, the characteristic of the rise that we got over here does not bear any resemblance to any characteristics that we would normally see in a blow-off top. And certainly this fall here doesn't bear any resemblance to what happens after a blow-off top. And what I can see here is that this is a bull market which has had a healthy correction, created another higher high with another healthy correction, and it really depends on what happens next before we can make up our mind whether this market has gone into a bear market or still in the bull market. Now, this structure to me is reminiscent of a continuation to the upside. And the reason for that is that what we've got is a very strong base down here. And since this point, what we've done is to have a higher high here, another higher high here, and another high here. And at the same time, we've created a higher low and another higher low. And until this point breaks here, at this point there, the structure for the bull market is still intact. Only when we break this level here will we negate this higher highs and the higher lows. And we can't talk of a bear market until at least this happens. But to be perfectly fair, classical charting will tell you that there can be no resemblance of a bear market until you really break this level here. Because this level here would confirm a double top. And many people think that the double top has to be a lower second top. That's not the case. We can have a higher double top, which we've got here. However, we can't say this is a double top until the price comes and actually breaks this level here. And for me anyway, that would negate this bull market run that we're having. So instead of actually panicking and having fear and all the negativity that I'm seeing around, we should take a bigger picture view and see quite clearly that the structure that we're following here does not bear resemblance to a bear market. Of course, there are certain points that we can point out to that if the market goes below those levels, then we have to think twice about it and have to change our narrative. But until those things happen, I'm always going to be siding with the picture that I see right in front of me. And that I see is a very high and very strong move to the upside. Perhaps this was too strong and we needed a big move to the downside and to create another base and foundation from which we can bounce up from. And it's not uncommon for Bitcoin to have these types of 30-40% moves down. So currently for me, when I look at this fall that we've got here, the bearish sentiment that we've got with this move that we've got since the 10th of November, what we really need to do is to actually move the price back up above the 53,000, this level here. So to break this bearish structure, we need to get the price back above this line, use that as support before we can move on. So until then, unfortunately, we will keep getting a little bit of a bearish sentiment until that happens. And that requires a lot of patience. And if the price should fall further, then you'd find that there will be a lot of support around these levels here. And you'll find a lot of people will use these as accumulation points, just like over here. And whilst it's not very pleasant going through this experience that we've been having over here, we really do have to hold our nerve. At the end of the day, no one said this was going to be easy. And if we have a look at the VPVR, we can see quite clearly with these bars here that we're finding very strong support in this region here at the $39,000-$40,000 mark. My own view is that if we do lose this level here at the $39,000-$40,000 mark, then there isn't really very much to hold us back until this level here, which is going to be around about the $28,000 mark here. And should we fail this level here, at that point, and at that point only, will I start to realize or to believe that we do have a double top here and that this is a failed bull cycle. And we have to always be fluid and flexible to respond to the market and realize that that can happen. It doesn't often happen, but we've got to know that there is a possibility that can happen. And if we keep going lower and lower, then the probability of that obviously increases. And the question is, am I expecting that? No, I'm not. Overall, I'm still bullish. I think we have an 80% chance of holding this level here at 39.40. We still have $42,000 on the table. We recently bottomed out here at the $42,000 mark, which of course was a higher low from here. So the chances are that this is still on the table to double bottom around these prices, around the $42,000 mark. I know a lot of people who are invested and feel a little bit stressed and on the edge. And all I would say is that maybe you're over-invested. And if I feel I'm over-invested, I would just take a few positions out to reduce the stress. At the end of the day, we should only be playing with money that we can afford to lose. And we shouldn't be getting stressed over it. And ultimately, no one knows the top or the bottom of any market. And all we can do is to follow a strategy. And for me, my strategy is that up to now, what's happened, I still feel that we are in a bull market and I'm expecting a blow off top in the next few months or so. But that shouldn't stop us from having a downside strategy, which basically says that, well, should this not happen, then we need to have a plan B to be able to make a different decision. So let's see where we get to, but that's my perspective of what I see currently in the market. Okay, so I'm going to start off by looking at the weekly chart and the 21 weekly exponential moving average, which is this yellow line here. And I mentioned last week that having closed below this line here, that we really needed to get the next candle here above the yellow line. Unfortunately, we didn't manage to do that last week. And this current week, which closes tonight, UK time 12 o'clock, we've got another confirmation below the 21 weekly exponential moving average. So it's quite clear that we're in a bearish sentiment all the way down here. And we do need to get this above the 21 weekly as soon as possible. But the way it's panning out at the moment is that we're looking at this kind of a scenario where we have an extended period of bearishness before we manage to break this 21 weekly moving average. And if we have a look at the daily chart with the 200 daily moving average, we seem to be finding support on there. So this looks quite reasonable that in the shorter term, on the daily time frame, we seem to be finding some support here on the 200 daily moving average. And again, if we break that, this is more likely to follow, unfortunately, with an extended period of sideways action. A closer look tells us that we're just managing to grab the 200 daily moving average and coming just above it. And the current price is at 47,200 around here. So let's see by the evening tonight whether we can hold the 200 daily moving average. That would actually be quite bullish and could be the start of moving back above the 21 weekly exponential moving average. So those are the two critical things that we really need to be looking out for to see where the direction of the market is going in the shorter term in the next few days and weeks. Okay, now we come to my favorite part, which is the Fibonacci retracements. Now, so if we just zoom out and look at the Fibonacci retracement here from the top that we made up here at 65,000 down to the bottom at 28,000. And I remember showing you this at the time that the next resistance that we're going to get after this bottom was going to be at 51, 52,000 around here. And this is exactly what we got. And we got this pullback at the time back down to these 38.2 levels at around about the 41, 42,000. So that played out according to Bitcoin's high affinity towards the 61.8. But if you look now at how far we've come with this flash crash that we've had in the last week or so. So if we reverse the Fibonacci retracement from down here to where we can expect it to come back down to, look where we are now. We're exactly on the 61.8. And this is one of the main reasons why I'm expecting the bounce to the upside. Because we all know Bitcoin has a high affinity towards the 61.8 when it's going up and when it's coming down. So this to me looks like it's going to be a very strong support level. Of course, if it breaks down, then we have to have a different narrative. But until that happens, the structure is in place for us to go to much higher levels, despite all the negative sentiment out there as well as the fear. Should this be the bottom, then we can expect the price to go up again towards the 61.8 level, where we should be expecting a little bit of a pullback or a breather. So if that happens, what is that level? So if we zoom in and take it from the top, which was at 69,000 recently, to the recent low of 42,000 here, then we must be aware that the level that we can come back up to again is that 61.8 and 65% golden pocket level. And that is at around about the 58, 59, $60,000 mark here. So this is what I'm expecting, that as long as we can hold these levels down here at the 42 to current levels of 47, 48, then we should be able to bounce all the way up to about the $59,000 mark before we have another little pullback here. And that would create a W pattern, a double bottom from which we can actually use as a foundation for higher moves. So let's see how that plays out, and only time will tell if it does so. But we must hold these levels here at the $42,000 mark. Okay, I'm going to move on to the next section, which I think you're going to like very, very much. And that is that I'm going to have a look at two ways that we can virtually guarantee of buying the dips at the bottom of the market, especially with the crypto market. And I just want to highlight a comment from one of my subscribers in the last video. And that comment was by Bjorn Gretesen here. And he said that I try and keep this very simple and keep buying when the fear and greed index is between 15 and 20. And the real challenge is to be patient, and I have learned that by the years, etc., etc. So I thought this was a wonderful comment, and I thought, okay, let me just have a look at, if you did buy between about 15 and 20, what would be the averages we would have got in the last few times that we reached these levels on the fear and greed index? So the current fear and greed index is in extreme fear, as we can see here, at 24. But only last month, it was at 54, which was neutral. And if we scroll down here, these are the periods where, according to Bjorn, we had reached these levels. So if anybody was buying around these levels, this is one cluster, that's the second cluster, and this is the third cluster down here. So I took the average prices around these levels and I came up with the following figures. So the first cluster I look at is this one here. After we had that blow off top at 14,000 in June 2019. So we got this cluster here around about the August-September mark. The second cluster is here at the COVID-19 situation. So this would have been a fantastic buying opportunity here. And then the third cluster we got was recently in May, June time. So if we have a look at these three last clusters that we got around those fear and greed indexes of between 10 and 20, I've already worked out the averages for you, so I don't waste time doing it. But if you want to do your own research on it, do so. And this fall here after the blow off top led to a fear and greed index between 10 and 20. And so we would have averaged just even here at around about $11,300. The second cluster was obviously around here. So if you'd have followed the fear and greed index, then you would have got an average price here of around about 6,500. And the final cluster of the fear and greed index was around here. And you would have averaged 34,600. So the fear and greed index actually is a very good barometer for actually buying at lower levels at wherever we are. So considering these market prices here, this average would have been a very, very good price to be buying in at. And when we were here, this would have been a great price to be buying at to catch the rally that we've got here. And obviously 11,300 would have meant that, yes, we would have come back down to these lower levels, but you were really saving up for this big rally here. So thanks to Bjorn for pointing that out. And the second method that I've also used in the past, and I'm sure many of you are aware of it, and that is the 200 weekly moving average. This is the normal simple moving average. And the reason for saying this is that we should keep this always in mind, that when we do have the eventual blow off top over here, then where is it going to come back to? Well, what does history tell us? It's going to come back to this line here, because if you'd have bought just based on this, you would have had 4 opportunities, or maybe even 5 there, here and here. So historically, these are the best points that you would have been able to buy in at to catch the next increases after them here. So by buying at these levels here, you're virtually guaranteeing a massive increase and explosion of your portfolio. So please do bear this in mind and keep this on your charts. If you do use charts, then make sure that you always keep this in your mind, that when we do top off eventually, where are we going to come back to? It's going to dip somewhere back to this level of support again. Okay, a quick look at the altcoins, and we'll start off with Cardano. I keep getting a lot of requests for Cardano, so there's obviously a lot of people who hold this. Very quickly, all I would say is that we've obviously made a very good clean increase over here and a higher high from this point there, but since then we've had a lot of weakness, and it seems to have broken down key levels. So we broke down this key level here. It tried to hold that, but it wasn't strong enough, because this is what support and resistance was along here. And I did mention in my last video that if you haven't already got it and you're waiting to get in, I would wait until the price gets, an open and a close above the blue line, which is the 8 exponential moving average. And it hasn't done that. It's fallen further down to this level here. This is another critical level. It needs to really hold this level here at the 1.2 level. And you may be wanting to dollar cost average at lower prices, which may seem a sensible thing as long as it actually takes off again. And if Bitcoin obviously goes towards a blow off top, then we have no reason to believe that it won't do that. But I have drawn another level down here, which takes into account these support levels down here and these levels here. I wouldn't be buying into this until I get to these levels down here. And if it does take off from there, then I would be prepared to just leave it. But at these levels down here, at the $1 mark, anywhere around the $1 mark would be a very good buying opportunity. Because the reason why I wouldn't buy where I am at the moment here with this price is that there are other assets which are showing much more stronger sentiment than Cardano. And it may well be that Cardano has, with the weakness that is showing here, they may have a little bit of another leg to go down to these levels before we get the bounce that we expect. Another one here is the XRP, which seems to be showing, just like Cardano, some very weak sentiment. So we made a high recently at 1.9 around April, and since then we've just made a series of lower highs. So for me, until we break this level here at around about 1.3, 1.4, until we get back to this level here and break this, that would be the point where I would consider jumping in. Until then, I would rather leave this alone personally. But if you're already holding this, then you are getting a strong support on this 200 period moving average on the 2-day chart that I'm looking at here. We need to hold these levels down here as support. Otherwise this is just going to tumble down. So I'm not expecting that, but it is something we need to be aware of, that these levels are very, very important. So while we had this flash crash here along with Bitcoin, we have found strong support on the 200 period moving average here. So that's at least a little bit of bullishness that it's holding there. It's not just fallen down from there. But certainly I'd want to see some strength in the price before I would jump on. And this is where I would be looking at to do so, at the 1.3, 1.4 mark. A quick look at the miners, Marathon Digital Holdings, because that seems to be the main one really, and where Marathon goes, the others follow as well. And we've had a lot of weakness again here. Since the flash crash that we had in Bitcoin, the miners have just been tumbling down, basically down here. And this may well be presenting a very good buying opportunity. So we'll just have to wait and see. But certainly we need to not go past below this level here, which is around about the $30 mark. We should find some bounce here, and this may well be a very good buying opportunity. Failing this level, I think we're going to come back down to this 200 period moving average here at around about the $23 mark. I'm not expecting it unless Bitcoin falls down to the $40,000 mark. So a turnaround is well due now on this. And if you look at the fall that we've had since the 10th of November to the current price, we've had a 60% fall. And that's the volatility that you will get with the Bitcoin miners on the downside, where you'll get very big falls. But on the upside, from where we are now, to get back to just where we were just a few weeks ago, to this point here, you would have around about 150% increase with any investment you make here. So this would pose a very good price to buy in on the dip, as long as we can get Bitcoin to start moving in the upward direction. So this to me presents a very good opportunity. Always remember with the Bitcoin miners that you're playing a very much a leveraged position with Bitcoin, because these miners are mining Bitcoin at the price of around about between $4,000 and $6,000. So let's see what happens in the next few weeks and months. But certainly I'm thinking that these seem to be very good support levels down here for the Bitcoin miners. Okay, a quick look at the other markets. If we look at the HYG, which is the high yield junk bond market, these are the levels I've been asking you to look out for here. So we did come back down to this a few weeks back, as you know, but since then we've bounced quite strongly up. So I'm not expecting a stock market crash anytime soon. Obviously this position can change very quickly, but certainly we're above the first level, never mind the second level, where I would expect a trigger in the Dow Jones here. So we're still well above the first port of call at the 85 level here. And if we have a look at the Dow Jones, we're still holding well above this very strong trend line that we've had for over 100 years. And it's at this green line around the $33,000 mark that I would start to get a little bit worried. And if we zoom in, we can see that we're still holding this strong support level down here before we even get to the green line here. So again, it doesn't seem imminent that the Dow Jones is about to top off. And if we have a look at the dollar on the weekly chart, again, I'll put the Fibonacci retracement here just to see where the 61.8 is. You can see that it's heading towards the 61.8 over here. So they're still showing quite a lot of strength at the moment, the dollar. And on the RSI, we can see that it's well above the 70. So it may well be overbought at the moment, but there may well be still a little bit of room to grow. This increase may cause a little bit more sideways or downward action with Bitcoin. So only time will tell, but there is still some little bit of give for the dollar to go to the upside here. So before I go into the wisdom bite section, I just want to bring you back to the Bitcoin chart, which is this weekly time frame chart, which I showed you last week, that when you look at this bump and run pattern that we've got here, which is basically this leading phase, the bump phase, and then the run phase, we're still finding support on this trend line from down here. But like you, I'm just hoping very, very quickly that the sentiment starts to move up to the upside, because it is quite nerve-wracking having seen this fall that we've had here. But certainly it's something not to be overly panicking about or to be fearful of or even losing sleep over. So on that thought, I want to give you some positivity and just basically give you a few ideas that I've picked up along the way on my journey up to where I am now. One of the things I find is that the people I've known for the last 30 to 40 years, while they seem to be quite successful in one area of life, which is to basically have a good career, unfortunately there are lots of gaps in their life which I can always see, and unfortunately not many people take this on board. And if you're happy with where you are and how you are, then that's fine, but I always feel that there's always room for improvement, there's always room to grow as a person, and we can only do that by working on ourselves. And one of the things I would always say to people is that don't follow the course of your last year or 5 years or 10 years if it hasn't given you the benefit that you want. And it is your choice. Give yourself the permission to have a choice to pick a new direction, a new destination, and to start going in that new direction. Certainly your outcomes will be much more different than the last 5 years. And I often say to the people that I do have a crystal ball when it comes to this, because you can actually predict how anybody's next 5 or 10 years will be by just looking at their previous 5 or 10 years. Because generally we're creatures of habit. And as creatures of habit, we continue to do the same things and continue to get the same results and outcomes in life. And then we wonder why we haven't progressed or improved in life. And there's the old saying that if you keep doing what you've been doing, you're going to keep on getting what you've been getting. And if you're not happy with what you've been getting, then perhaps a change in direction, a change in destination, a change in objectives and goals and dreams for your life will set you on a different course. And in all this, you have to believe that you can actually get to a bigger, better and wiser place in life. And this is where really the law of attraction comes in. By focusing on the positive aspects of life, by focusing on the positive outcomes of life, only then will we attract those positive experiences and circumstances into our life. And it always brings me back to this particular story whereby there are two people sitting in a garden and one person says, "Aren't the flowers wonderful and smelling great?" While the other person then says, "Well, they'll be dead tomorrow." So in any situation, you can look at it from a positive angle or a negative angle. And all I know from my experience of life is that those people who look on the positive side, on the optimistic side, they're the ones who end up being much more happier and much more successful on any level of measure that you may use. And one of the things that I've noticed with people is that on any situation, the people who are unsuccessful have one way of looking at things, while the winners of life, while the successful people have a different way of looking at life. For instance, if I say to you that the people who are unsuccessful only notice thunderstorms, whereas the people who are successful, they notice the rainbows. And while the unsuccessful will look at the ice on the streets, the successful people will put their ice skates on. One will be aggressive and the other one will be assertive. One lets things happen while the other one makes things happen. And one of the things that we can do in order to attract positive aspects into our life is actually to start off by having a real purpose. What is your purpose in life? Ask yourself, where am I going? What do I want to achieve in this life? Do I have a vision which I want to aim for? Or am I just going to go sideways? Because without a purpose, without a goal, without a dream, without objectives in life, that is exactly by default what will actually happen to you. You will just go sideways and sideways without really making progress. And you'll notice the people who have got a purpose, those who've got a vision, those who've got a dream that they're trying to live through, they're the ones who wake up in the morning with a bounce in their step, looking forward to the day. Just by looking at their body language, you can see that they're trying to get somewhere. They'll have a positive body language. The words they use are positive words. The tone that they use is a very positive tone. They're not the type of people who get upset over little trifling matters. To them, that would be a distraction. And they don't want to get distracted because they've got a purpose, they've got a goal. They're aiming for something. They've got targets and objectives and a destination to get to. These are the types of people who are flexible enough to accommodate the opinion of others without having to embrace it. So in all, don't let little things distract you on your pathway to success. You are bigger, better, and wiser than that. So make sure that the pathway to success is always clear of the clutter of life. And all I would say is set yourself free from the limitations imposed by others on you. One of the things I do find when I meet people, if the people you're talking to are the type of people who are constantly blaming their education, their background, their past, their parents, their government, their manager, the company they work for, etc., etc., i.e. those people who blame their lack of success on everybody and everything except themselves, then you want to keep clear of those types of people. They will only give you negative energy and bring you down to their level. And we must avoid blaming anything and everything else and take responsibility. And by doing that, the power is then in your hands to take action and to carve out your pathway to success. And on that note, we'll finish for today. I hope you found value in the technical analysis as well as the wisdom bite. And if you did, then please do remember to like and subscribe if you haven't already done so. If you want to leave any comments, questions, or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.